Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw that overall buyers maintained control and the market continued to balance and trade in the upper part of the recent range. So at this point, heading into the open, we know that the market is setting up for a short-term directional move. The other markets have already made new highs, and the S&P is still in catch-up mode and has potential to test the all-time high at 26 quarter and then most likely break out above it if we can actually hold above the pre-market support zone and then get a sustained breakout above 19 to 20 half pre-market resistance. So at this point, the main idea is that the buy side is in control, and as long as we're not seeing any clear-cut warning signs showing us a failure for buyers to step in here and just a general lack of momentum, as long as those conditions are not present, we are going to continue to keep our focus on the long side and still give more edge to buyers. Now, at the same time, we know that the market has been balancing above the 0975 to 1175 area. We're using that as the micro bull bear zone. Now, ideally, ES actually holds above the 1475 to 1675 pre-market support and simply balances up here and then puts in a breakout. And we actually go through 26 quarter and push to a new all-time high. That is the current active scenario in the market, but that doesn't mean that we're not open to a move lower. As day traders, and especially in a market which is short-term news driven here, you need to be able to flip your bias. And we're going to be using the 0975 to 1175 area to establish our directional bias. So ideally, the market holds above 1475 to 1675, but the last spot where buyers on the smaller time frames can still be active is the 0975 to 1175 micro bull bear. Now, in the event that the market fails to hold pre-market support and the micro bull bear, then we can actually get even short-term liquidation down into the 06, 03 half, and finally 97 to 99 support area where buyers can still be active. And in the event of a stronger downside move, we can still get a reversal off of the 90.75 to 92.75 area. But that is not the primary scenario that's in play right now. That is more of a contingency in the event that we don't get an upside breakout and we actually start seeing some clear-cut signs of failure to go higher in the other markets, and the ES starts showing some clear-cut signs of weakness, either via strong, wide range bars to the downside and sustained downside momentum. But absent any clear-cut selling, our focus is going to remain on the upside. Now, because we're trading at these elevated prices, we do need to see some broad market participation in order to move higher. So that means that, if we're opening and the advanced decline is pretty mediocre or negative and the momentum is very mediocre, it's going to be tough to get a sustained breakout. In order to really get a sustained breakout to new highs, you do want to see strength in the underlying internals, and you do want to see some sustained upside momentum on the NYC tick, and you want to see that bullish market structure remain intact. So that's why the ideal scenario for buyers would be if the market actually held above 1475 to 1675, but 0975 to 1175 is the final spot, and as long as that area is holding, the upside scenario would still have a shot at playing out. But keep in mind that strong markets don't put in deep retracements and deep pullbacks, and in order to get a new all-time high, we need to see a strong market, and that's why we are going to be focusing in on the pre-market support and the gap fill at 1275. So by default, we're giving more edge to buyers. So far in the overnight session, we've seen that the market's pretty balanced and it's running on below average volume. Now, volume is not an indication of market strength or weakness, right? It does not correlate to market direction. It simply tells you the type of range we can get and the type of volatility we can see on the day time frame. So even if the market is running on below average volume, it doesn't mean that we can't just continue making our way to higher prices and at least go up and test the 24 quarter, 26 quarter area. And it doesn't even really mean that we can't break out above it. It just means that the pace may be a bit slower and the overall range on the day time frame could be limited if the volume remains light. But if the volume does pick up, then we can even get a better range. So far, we're in a fairly bullish market. Again, the focus is going to remain on long setups unless we're seeing clear-cut signs that the buyers are simply absent, and in that case, we can switch our bias. Now, on the short side, you still want to play a bit more defense, and that goes for entries and exits. So in the event that a short setup actually sets up in the market here, we are still going to be aware of trade location. And it doesn't mean that you have to shoot for ideal location. It just means that you want relatively good location so that if the buyers do step in at a key support, you're not in a vulnerable spot where you instantly get stopped out. So, in an overall bullish market, you usually want to get somewhat good location on the short side. And again, the main idea is that the market is balanced, it's setting up for a directional move, one way or the other. By default, we're focused more on the buy side, but that doesn't mean that we're going to get blindsided in the event that buyers don't show up, and we start seeing signs of downside momentum and weakness across the board in the other markets and in the S&P. So be ready for a move in either direction, but by default give more edge to the buy side. But if we start seeing some clear signs, then we will actively pursue short setups as well, because anytime the market starts contracting in volatility and the ranges really start contracting, typically that leads to a directional move one way or the other. Because we're in a bullish market, because we're balancing near the upper edge of the range, that's why we're giving more edge to buyers. But if that doesn't play out, then anyone who's bought over the last 1 or 2 days will also be put in a losing position if we start breaking below the micro bull bear, and that can result in some acceleration on the downside. So those are really the main thoughts. That's the market context, the way that it's set up right now. So let's see if we can get some upside momentum off the open here, if the market can actually hold some of these key areas, and that'll help us establish the bias, and we'll take it from there.